Knowledge lies in a process of piling up facts. Wisdom lies in their simplification. Martin H. Fischer. And Martin makes a great point, and it's a point well taken for what we do, following price movement every day and following trends. Because knowledge we're not so concerned about. That's just piling up a whole bunch of facts, data. What we're interested in is the wisdom of simplifying them, finding the signal in all the noise. And remember, the signal is the trend and the price movement. And man, is it not working out great here in the last few days. Remember how tough October was. And for all of you who continued to spend your 10 to 15 minutes a day following the markets as we told you to do, you're reaping the rewards now, aren't you? Aren't your practice trades going wonderfully well? Look at gold down 1.55%. Look at 20-year bonds down 1.81%. Look at the Qs, the Nasdaq 100 up 0.34%. And look at the S&P 500 up 0.35%. For those of you who did not stick with us, who are now our fair-weathered friends and you're back because the markets are surging and moving and you're interested again, well, you missed out learning all there was to learn during October. Now that we are in full swing in the fall-winter trading zone, we are seeing things really start to move, and you lost the opportunity to practice with us during the difficult time periods, which is what you have to go through. The markets aren't always easy. They don't always move when you want them to move. They move when they want to move, and that's what's so important to learn. You don't force the market. You follow the market. Oh, that's a great quote. You don't force the market. You follow the market. I am writing that one down and keeping it, trademarking that one. So again, you don't force the market. You follow the market if you're wise. Now, what do we see going on? I've already said the S&P 500 up 0.35%. Check it out. Of course, we had a weekly vertical crossover. Back on Friday, the 1st of November, we have a nice big green up candle forming for the week. The wick is well above the prior wick, the candle body well above the prior candle. And again, things are looking beautiful on our weekly vertical crossover. I know some of you jumped in last Friday. You jumped out on Monday with a sizable, decent gain in your practice trade. That is fine. Some of you have been sticking around. And of course, things have been going quite nicely for you. Price percent oscillator heading up, derivative oscillator heading up, nice and strong. We told you to keep an eye on the weekly chart and the 2-day. This latest 2-day candle that represents Wednesday and Thursday is pushing up to a higher high, both in the candle body and the wick. Price percent oscillator heading up, derivative oscillator gaining some upward momentum. We look at that 4-hour chart. What do we see there? We see up in the morning, and again, a bit of a sideways slide in the afternoon. We see that the price percent oscillator has bounced off the 4-hour trend line. We had a big jump up in the morning. Then look what happened to the derivative oscillator. Lost a bunch of energy in the afternoon. That is quirky and a little bit weird. We're going to pay attention to that. That is strange. We talked about the sideways slide that we had for a few days. And then, of course, we had that bump up. Price is still well above both the 2-day and the weekly trend lines on the 4-hour chart. So continue to just watch and pay attention. And again, you can take your profits at whatever profit levels you have already put in. We have seen things go up nicely so far, and we'll continue to watch and monitor. It is interesting, but again, that 4-hour chart, a little weird, but the 2-hour and the weekly, of course, are looking quite nice for us. Now we go from the S&P 500 to the Qs. We've been in that Qs trade quite a bit longer, haven't we? From the 25th of October. That's when we had that crossover going up. And of course, we're going into our second big up candle. And I know there were those out there, the market can't go up anymore. It can't go up anymore. There's so much downward pressure. Well, we see that upward pressure continuing to push price up. On that weekly chart, we go from the weekly to the 2-day. And of course, the derivative oscillator's gained a little bit of energy. Price percent oscillator heading up. 2 days not as strong as we saw on the S&P 5. Well, maybe actually it is. Let's check that out. Just look, yeah, they are about the same. They are about the same. So again, we have a little bit bigger candle and a higher high. That's good to see. Price well above the 2-day and the weekly trend lines. We go to the 4-hour chart and we have up movement in the morning, red spinning open box candle in the afternoon. Now the derivative oscillator crossed over on that 4-hour chart. Well, it was positive in the morning and then crossed over going down in the afternoon. Price percent oscillator popped up and is trying to cross back over. So that is a little quirky and weird, but our 2-day and our weekly are still sufficiently strong. So keep your eye on things. We'll see how the week wraps up on Friday. And again, take profits where you have set your profit margins, okay? You always put those in on your practice trades. Good till canceled sell order the minute you enter your buy order. You also go ahead and mark on your charts in a horizontal line your loss point. You can do the same with your profit points. In fact, I'm going to do a teaching on that. That's important for you to have that visual on your chart and to use those. So that's where we are, folks, as far as stocks go. We're now going to leave stocks, go to bonds. Look at that. Bonds down 1.81%. Now, those of you who are saying, wait a minute, why do you want something to go down? Why would you buy something that's going to lose money in a practice trade? Well, that's not it. TBF is the ProShares short 20-year Treasury bond. It is an inverse fund, and it goes up while TBT, the underlying fund, goes down. Little bit of sophistication there for you to practice in your practice trades. We keep it simple. We don't switch over to inverse funds. We just stay with the same underlying ETF, which is TLT. So we're tracking that as it moves down. It just makes it simpler for me to do here at the channel. What do we see happening? Price percent oscillator heading down. Derivative oscillator losing some downward momentum still. It's because of that green spinning top the prior week, but a nice plumbing lower lows, looking good with a red down candle. We go from the weekly to the 2-day. We see that 2-day kinky, you just moving over, heading down, lower low, really plumbing down. That's nice to see on that 2-day candle, pushing through the old 2-day trend line, which guess what? We can redraw now. We were lamenting how we couldn't redraw that. Well, we can do that now on our chart. And hey, for those of you who wonder what charting software we use, it is freestockcharts.com, the paid version TC2000. You'll see a link in the show notes. Thank you to all of you who have subscribed to the paid version. You get $25 off if you use our link to TC2000. We love it. We have used freestockcharts.com for many, many years. I think it's the best product out there. And of course, it has the indicators we use, the price percent oscillator, the derivative oscillator. Many of you write me using other platforms, wondering why they don't carry them, because they're not as good, is what I would say. That's my opinion. I love freestockcharts.com and TC2000. We see the derivative oscillator gaining downward momentum, price percent oscillator spiking over, going down. Nice big red down candle on that 2-day chart. Go to the 4-hour chart. Down in the morning, further down in the afternoon, again down 1.81%. That's just beautiful. How many of you waited and did not get in earlier, or maybe got in and got out? We talked about a jumping in point for you in the afternoon on Tuesday for a practice trade going down somewhere around the opening at 138 or so, down to a low of within 2 days? Down to a low of 134.45 from 138. Not bad, my friends. Not bad at all. And again, remember, those inverse funds like TBF, they're priced differently. Of course, the price is not the same, but the percentage movement is set up to be the same. So if TLT goes down 1.83% for the day, TBF goes up 1.8% for the day. That's the way they have that set up to track, and it's pretty close. So let's move on lastly to gold. What's going on with gold? Gold down for the day 1.55%. Now we've seen gold really sliding sideways, tending down since we had that weekly vertical crossover occur back on the 27th of September, up for a couple of weeks, the week ending the 25th of September and the 1st of November. This week is down, a red spinning top. Now, it's not a solid red down candle with no wick on top. It does have a little bit of a wick on top. Price percent oscillator has peaked over going down, and the derivative oscillator gaining downward momentum. Maybe I should say plumbed over going down. That would sound better. And what do we see on the latest 2-day candle? It is a nice big red down candle with no wick on top. Price percent oscillator spiking over going down. Derivative oscillator gaining lots of downward momentum. And we go, let's see, is there a way to? Let's redraw. We're going to redraw that 2-day trend line also while we are here, since we've had the latest one draw, and we can actually do that now. We're going to go ahead and reset that. After that sideways slide, it was hard to see. So we've got that reset. That's how easy it is for those of you watching the video, listening. I just very quickly reset our trend line on the 2-day chart. Remember the rule for drawing trend lines: bottom up, top down. So if the charts are going down, you draw your trend line from the top. Charts are going up, you draw it from the bottom. What do we see on that 4-hour chart? We had the crossover and a potential entry point in the afternoon on Tuesday, somewhere around, and again, it's hard to, somewhere around the 141 mark, and of course, reaching a low all the way down to 137.60. So again, things moving down quite nicely. Price below both the weekly and the 2-day trend lines. Price percent oscillator heading down, derivative oscillator spiking down. Things are looking nice. Folks, that's where we are as we go into the last day of the week. Remember what happens at the end of the day on Friday? We record for you our comprehensive review and forecast. We cover what happened in the past week and what we see in the charts for the potential week. Now again, we're talking about practice trading. We're not a stock calling service. We're an education firm. We want you to practice with us. We appreciate in particular all the people that are with us each and every day. If you're not with us each and every day, 10 to 15 minutes practice trading using your trade worksheet, your daily market worksheet, your weekly market worksheet, you're wasting a lot of your time and energy. We need you to spend 10 to 15 minutes a day to learn what this is about. If you only tune in when the markets are really moving, trying to get a hot tip so you can do some trading, you're not being smart. You're not doing what you need to do. You need to practice trade. You need to learn this stuff. You need to do it again and again and again. You can learn how to do this, but it's going to take some time and some effort and energy. The people who are looking to get rich quick are not going to get rich quick. They're going to lose quickly. And perhaps in the long term, just keep losing until they give up. We want you to practice trade with us. Learn how to read these charts, how to understand what's going on in these markets. We have lots and lots of great training. Speaking of great training, we've got a great training for you today on liquidity. We want you to take that. It's in your show notes. If you're not a subscriber, go ahead and subscribe. Free at chartingwealth.com. Put in your name, email address, and you will get the trainings that we have that we put out every day. This one, Liquidity, a key to your success to supercharge your training. If you haven't purchased our book, appreciate all the folks who have. We just saw all the latest orders today. Thank you so much. You can find a link in the show notes, either at our YouTube channel or in the show notes that we email to everyone every day who's a subscriber for free. And you'll also see in those same links to purchase the book, you'll also see links to download your own PDF of the daily market worksheet, weekly market worksheet, and trade worksheets. And don't forget, close of the market on Friday. We're going to record for you the comprehensive review and forecast We so appreciate you being with us, my friends. God bless. All the best from the whole team at Charting Wealth World Headquarters.